Hey guys, Brian, it's Monday, March 16th, coming to you hot from the Fed rate cut emergency last night. We're getting inundated with phone calls from people saying that they can get 1% interest rates. Okay, first of all, let's just do this. Very, very clear. The Federal Reserve does not have any direct impact on fixed rate mortgages. Period. End of story. The Federal Reserve is controlling what's called the federal funds rate, the Fed fund rate. It's the interest rate or the cost that banks pay to borrow money from other banks and borrow money from the Federal Reserve. So it's going to impact things like home equity lines of credit. It's going to impact student loans, potentially adjustable rate mortgages, but it has zero impact on fixed rate mortgages. Fixed rate mortgages are tied to a completely separate financial instrument called mortgage-backed securities. I won't get into the geekdom of that, but suffice it to say that the market is driving what's happening with interest rates. So, real quick, right now we've got a major supply and demand issue. There's $11 trillion worth of mortgages in the United States. Our industry, the banking industry, can handle about $2 trillion worth of originations on an annualized basis. You can see that there's a little bit of a math problem, because if 10 people are trying to refi and we can only do 2 through the year, that means 8 people are going to be standing in line. So how do we fix that? Here's what I think. Interest rates should be lower than they are. They're probably going to drift lower, but until we see the pipeline clear out, until we see some of these people who have applied for mortgages get those closed out, there's not much that's going to happen. The windows of opportunity are going to open and close very quickly. And so what we need to do is we need to go back and think about what you did when you were getting ready to buy your home, and that is we want to get you pre-approved. So step one, let's do a quick analysis on your mortgage and figure out at what interest rate does it make sense for you to pull the trigger and what will the savings be. Once we've established that, we're actually going to get you pre-qualified, and we're going to pull credit. We're going to get your you're going to get some income documentation, because here's the deal: when the window opens, when the rates do open, and that's just going to be like short little windows of time, it's going to open and close really fast. We need to be making sure that we're working with our homeowners that are qualified and committed to move ahead. We're going to ask you to move quickly on it, but once that rate window opens up, we can get you in the pipeline, we can reserve that money, and you're good to go. So think about it this way: if you're not doing that, you're like the homeowner that was trying to buy a house without getting pre-approved. Your stuff is going to go to the bottom of the line, because lenders won't have the time to start talking to people about refinancing a mortgage when those windows open. They want to move quickly with people that have already established that they're qualified and ready to rock and roll. So I've got a link. It's called our refinance analysis questionnaire. Get that completed, send us a mortgage statement. We'll run that analysis for you, give you a presentation. You can watch it via video in the comfort of your own home. We'll set up a quick little call to be able to go through that presentation. If it makes sense, you're pre-approved, and we're ready to rock and roll once that interest rate window opens back up. So don't be like the people that are going to be standing in line waiting. Make sure that you get to the front of the line. We're here to help you out. We appreciate your business. Stay cool, stay calm, and make it an awesome week. Thanks again.